What is going on, everybody? And in this video, we're providing a state of the market and stock picks for August 16th, 2022. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day in the week ahead in this very slow grinding market that is not fun. But nonetheless, let's get into state of the market. Currently, again, something I'm going to keep reiterating until it changes. Not much has changed. There's nothing in the market that's changing. The market, I think, is not going to put full risk on until they know what exactly is going to actually hit full peak inflation, which we're not really going to know until towards the back half or towards next month to determine if it's come down even more from 8.5 or not. So, and then we still got another month and a half before the Fed. Plain and simple. Now, there was some really bad news as far as the growth rate in China and Japan earlier today came out, and they're still deteriorating from last month. So that is definitely not good. The U.S. dollar, which is really interesting, has really been hovering, and it's actually looking like it's getting ready to break out again. Business activity in Europe falls at a nearly record pace. You've got things that are showing more signs of a recession, about things getting worse. Now, I try to reiterate the fact that, again, the stock market is not the economy, as the stock market will push quicker than the economy will until something, until you get sticker shock. When you get sticker shock value, then the market will sell and be panicky. Right now, we've had probably one of the best runs in a minute, but we've been playing with this trend line. So really tomorrow, what I want to watch is to see if we could break above the 4,300 mark tomorrow. If we can open up above that, I think we can actually start getting some headway towards the upside. Oil is coming down as well too. So that is a good sign. You're starting to see some things peak, but again, there's still there's a lot of bad stuff that is catching up. And again, you're not going to really know what's going on until more time passes, especially when it comes to earnings. And primarily this week, again, looking at big earnings like Walmart and Target, primarily to kind of gauge where the retail is at and seeing where we go from there. That might give us some leeway. Aside from that, we do have Tesla stock split right there. I believe it's on the 25th, and they're going to. They might get some momentum because of that. Again, if the market can open up, I think we can actually start running pretty good for the next 2 to 3 weeks. Again, banks looking strong, but everything else is kind of risk off. I think, again, like I said, I don't like the way the dollar is currently right now. It's extremely high. Yes, the oil is coming down a bit. But one thing I've noticed, even at the gas price pump, it's popping back up again. So I want to see what's really going on there. Even though there is some relief in a way, but will that relief continue, or is it going to stay high? Is the question. And then again, all depends on the next move of the Fed. You're starting to already see. Housing starting to deteriorate as far as the demand a little bit. So that is something to keep on watch. The home builder sentiment turns negative as well. That came out today as well. So we'll have to see what happens there moving forward. But right now, again, technical level, we want to see if we can break this. If we don't, we definitely need a pullback. Again, these little pullbacks are nothing. You need a healthy pullback. I would say maybe 4K would be a good healthy pullback. I don't think we're going to get that. We broke through all this resistance, which is now support. We're getting to a lot of good cleared levels. I think we could potentially break here and at least try to push even more. Maybe we hit 4,400 before the next meeting or the next report. Maybe that would help us out. Maybe we did hit bottom. Very well could have hit bottom back down here. Again, time will tell moving forward. But even if you miss this, right? I started saying dollar cost averaging around this first break, and then around this, I was a little bit more cautious in case it got pretty crazy, but it didn't. Was talking about dollar cost averaging around this whole zone here, but nonetheless, we have to see, right? This thing can flip and panic can get set in, and this thing can really sell off, and so that's what we're trying to avoid moving forward. So right now we're kind of at a critical part for the beginning of this week. We want to break again above that 4,300 tomorrow. If we can do that, again, I think we've got a pretty strong shot moving forward. We're going to take a look at Bitcoin a little bit here. Bitcoin is just flat, and a lot of things are just flat. You can't really do much when things are just flat, and these moves are just too small to really do anything. So it's better to just be patient, wait. Dollar is still 106. I'll take a quick look at the dollar here. The dollar may be looking like it's getting ready to break out. If the dollar can break back above the 107, could be in some trouble again if it starts to ripping again. So it's something to keep in mind. It hit support strongly. It's held, and now it's starting to gain momentum. Now can it start breaking back up? If it starts breaking all-time highs again, right, it could be a matter of time before the market starts to really pull back. So watch the dollar. So just really watch the dollar and see what happens there. But it's something you want to keep on watch. Commodities again. Commodities actually started pushing up again today. So that is something. Actually, I take that back. Commodities, or some commodities, are starting to push up. Your coal, your steel is starting to push up. Lumber is starting to push back up. So that's something to keep on watch if things start pushing again. Again, TTF gas, it popped 7% today. So again, you're not going to know you've hit peak until you've had a long enough track record to actually determine, and that peak will have passed for a while. So again, we are very far from out of the woods. Again, anything to turn this market around and start selling. So as far as Tesla's concerned, Tesla needs to break this 940. That's the key level there. If it can eventually get above there, could get some runway. But you have to, again, remember we've had earnings run. These things are really starting to die out, and you're not going to have much more strength. You're running out of momentum. There's not that much more good news. There's not, and more so, like I've talked about, the market by design will push up, but the problem is we don't have a clear view of the next 6 months. We do have the Fed meeting, and so that's what's kind of killing motivation. You do have another core CPI coming out before then, and so that's what's really kind of killing motivation or the momentum right now. So again, we want to see if we can break that 943. If we can, again, I think we can make some headway, possibly that 1K mark. If not, we could, like I've talked about, we could just chop around here. We could head back down to the 840, and again, just play this range until we come into the next earnings cycle before a nice pop, or we get some news. Maybe positive market sentiment news, like a good another core CPI, which is lower. We could get a nice rally out of that, because then people would really feel like they've hit peak at that point. So until that happens, that's kind of what you're left with. Shop is something I brought up. Interesting to see what goes on here. Watching that 48 mark. Again, these things, I want to see if it does break out of here. So definitely don't want Shop breaking back down below. Essentially, where the support is around 38. If for some reason we got down below 38, I can see this thing selling all the way back down to 30, potentially. This thing has really struggled since the beginning of the year and just does nothing but continue to sell off. So really watch out for that one. But for the downside, I think could potentially be good. UPST is one I've been talking about. Again, everything is just chopping, so I don't really care too much about what's going on there. BA flat, everything's just flat. Everything looks pretty much the same. So to kind of keep reiterating, the thing is here is the banks do look good. So this is something to consider, right? If we can break above the 124 mark, again, this thing could potentially get some gas up to 130, leading to another rally. Kind of up to that 4,300 mark that I was talking about on SPX. If we can hit that, I think, again, if we could break above the trend line, I think we can get some gas to the upside, try to squeeze in some more rally here before, again, that next report. So again, if the report's bad, this thing can come right back down as quick as it came right up, so, or even quicker on the way down. So again, I think the Target and Walmart, again, this week they have earnings. if they do good, I think this thing will really gap back up, potentially close this gap pretty good if it does. If it doesn't, yeah, it could be in trouble. You'll be seeing these lows again at 140 for Target. And again, for Walmart, you go back to 119. If we don't, I don't think this is going to break the 133 until we get news. If not, this thing could gap up. Could get a nice gap on these. These might be worth a YOLO going into earnings if they do well. Again, I think they could provide some good market sentiment and push us back up. But things just aren't looking good, and things aren't looking great and are very uncertain, and that's why the market's really being held down. Another potential one, which I don't really play, but if you want to look at credit cards, and I've talked about credit cards over and over and over, again, I would really like if this thing pulled back, but because it's kind of topping out here at the 125 or the 215. But something to really look into the next earnings cycle is credit cards. I've talked about the 35% growth. I think this thing should be on your back burner. So when the next earnings does come along, that if it dips by chance back down to 190, which very well could happen, to set your alerts and then get a position in these things before going into next earnings. And I think you can get a nice pop from earnings. A nice gap up. Again, really depends on market sentiment, but I think these things can really do well, especially with their forward guidance and what they potentially see, which is getting concerning in another fashion that things are just getting bad in general. I know people are waiting for a housing crash. It seems almost every year people are waiting for a housing crash again, but since 2008. So we'll see. We'll see how we go. Again, the growth GDP is not looking good around the world. Again, that's leading to more depression, potential depression. Again, if it's affecting the world, it's going to affect us in one way, shape, or form. We can't just pretend like it's not going to. I think in the short term, maybe, but long term, you can't. So again, we have to see how things open and then go from that point. So if you made this far, I appreciate you. Go ahead and drop a like button. Until next time, I'll see you guys later.